Oh, awesome. Well, thank you so much for having me. This is awesome. I enjoyed the last time I was on as well. It was a great group of people. Um, yeah, let's just open it up to Q&A. If anybody has any questions or, if you want to take it in a certain direction, we can talk about networking, how to network properly. We can talk about how to build your team, raising capital. I know that's always a question, that was something that a question that I always had when I started out was, what's that secret sauce? What's that one word or one sentence I could tell people and they will just drop $100,000 or $1 million on my lap? Right? What would be that one word, one sentence? And I kept looking for that secret sauce.
Okay, share the sauce, Nitzan. We're listening. Go ahead. That sounds like a good place to start.
So the secret, so there's a saying, right? And I was talking about this with somebody earlier this week, right? We've all heard that saying. You find an amazing deal, the money will be there, right? How many of us have heard that saying? Just find the deal, and the money will come. Well, I had several deals in the beginning of my career in multifamily. I had multiple properties, and I was working on the great deals, and I put them under contract, and I looked left, and I looked right, and I looked left, and I looked right, and I was like, where's all the money? I had great deals. People told me, find the deal and the money will come. Well, I learned that was only half of the sentence, right? The other half is so the whole sentence is find the right deal and the money will be there if you built the right relationships. So the secret sauce that I found about raising capital is not one word or one sentence or just having a great deal. You actually have to go out and build relationships with people so that they can trust you. And what I've learned is that the secret sauce is that I don't want to say that people don't care about the deal that they're investing in. They care more about you, the person that they're investing with, than the deal. The person, the connection, the person that you're talking with, you're more important than the deal. The deal will come second. So that relationship that you got to have. I have many people that tell me, you know what, Nitzan, we invest with you, not on because we've seen how hands-on you are with your properties. You're always traveling. You're always surprising them. You're going boots on the ground. You're checking on the property. So that's what I keep hearing a lot. Another thing is, people say we trust you, right? I haven't really heard a lot of my investors go, dude, that was such an amazing asset. That was great. I mean, yes, obviously when we sell and they get their money back and whatnot, but for them to invest, it's more on the trust factor. So go out and build relationships, right? Now, when I started out my career, my mentor told me, go to 2 networking events a week and just grab business cards, stockpile, right? Just hoard as many business cards as you can and just start emailing them. I said, okay. So I would go out to networking events. I would go to 2 networking events a week. Then I would send my wife out to 2 other networking events, and I would send her sister with her. So we would be hitting multiple networking events, and I literally got stockpiles of business cards. And I didn't know what to do with them because no one taught me how to build those relationships with those people. Not only that, but I wasn't taught to uh, build an avatar of the investor that I'm looking to go after. So I would just meet everyone and anyone. It doesn't matter. It doesn't matter if they were an employee, if they were an entrepreneur, if they were broke. I would just meet them and try hitting on them. And that was a big waste of time. Someone asked a question about cold calling. Sorry about that. It depends. Who are you cold calling and what are you cold calling for? I'd be more than happy to have a conversation with you. If you want to unmute yourself, we could talk about it. Okay. So Cold calling for investors, you would cold call investors. Oh, everyone and anyone, Z buyer experience, FISBOs, and for sell by owners, we're talking single family. Yeah, cold call. Absolutely. When I was doing single families, I would cold call people as well. I'd pick up the phone and, I'd drive by a house, I'd see it dilapidated, or the landscaping would be off. A tarp on the roof or whatnot. I make about 600 dials a week, have about 25 conversations, and make about 10 to 12 deals. Okay, that's awesome. Yeah, cold calling is great. My question is, why are you doing all the work? Why are you doing all the calls? See, real estate, what we're taught on, by all these people that teach us real estate, and it doesn't matter if you found it online or if you go to in person, they teach us to have another stressful job. Like you said, I cold called 600 people. I spoke to 100 of them. I got 10 people to talk to me. I did 3 deals. Right? That for me is stressful, right? Very, very stressful. My take on things now is I find people to do those things for me so that I don't have to do all of that. Right. In the beginning, when you're getting started in your business, yes, that's something, right? We all have to do, we all have to put on many hats, right? The hat of the marketer, the hat of the cold caller, the hat of the investor, the hat of the CEO of the chief marketing officer. But once you start the ball rolling, once you start getting things in line, then you want to start putting people in different positions and let them do all of that for you so that you can free up your time, right? And we hear it a lot saying, work in your business, not on your business, or work on your business, not in your business, excuse me, right? You want to get to a point where you're constantly working on your business, where you're designing your company, where you're designing your business, you're designing your life, right? Yeah, VAs would definitely help in a lot of situations. They get a lot of stuff done that that needs to happen, but is not our highest and best use. So I always ask myself, what's my highest and best use? Is doing this particular task my highest and best use? If it's not my highest and best use, I go, well, who can help me do this? Who can help me now go out and do what needs to be done? And I'll find that person. And I'll either bring them on my team and make them a team partner, or I'll hire them, all that other kind of stuff. I'm just looking at the different comments here. So yeah, so Trevor Thompson says, I really dislike using the phone and it definitely affects my capital raising. Yeah, today we have Zoom like we're doing today. And a lot of times, thank God my business right now, I've gotten to a point where I can shoot somebody an email and I can raise capital from them. That's kind of where you want to go, right? That's where you want to get to, where you've gotten the reputation, you've gotten the track record, where you can just email your contacts and go, hey, this is what we're doing. This is what I need. And they'll either say yes or no. And if you're starting out and you're like, dude, how do I get that track record? It's the chicken or the egg. What came first, right? How do I get into a multifamily deal if I've never gotten into a multifamily deal? How do I get a lender to loan me money if I've never done a deal before? How do I get an investor or a contact of mine and convert them to become an investor with me? Well, if you've never done multifamily before and you're just starting out, the best way to do that is by attaching yourself to a sponsor, a team, someone that's already doing deals, that has a track record, that has the history, and figure out how you can add value to them. What other question? So did I answer that question about what's the sauce? The sauce is building relationships with the right people. And what are the right people? You see, for example, I have avatars for my, when I built out my marketing plan, and I said, who am I going to go after? when I'm doing my social media posts, when I'm going out to networking events. Which networking events am I going to? So I created avatars, and they're very, very specific avatars, meaning I know their name, I know their age, I know their spouse's name, how many kids they have, their children's names, how old their children are, what they like to do as a hobby, what their work is, and what their goals, needs, fears, desires, and wants are. And I've created that person. And now whenever I post, whenever I do a social media, whenever I go to networking events, these are the people that I'm looking for specifically. Because when I'm targeting these people, they will hear my message in my marketing, but everybody else around will relate to that piece because I'm targeting someone. It's like fishing. I'm not going to put a swordfish bait if I want to catch salmon, for example, right? One is going upstream, the other one is deep water. Two totally different fish, different types of animals. They think differently. They want different things. So I got to know who I'm going after.
Hey, Nitzan, if you would just share just some of the current deals you've worked on or some of the deals maybe that you closed in 2022, because I know when you spoke almost about a month ago, not everybody was on there. So maybe that would be just helpful in terms of just background for people.
Yeah, absolutely. So December 21st, I closed on 126 bed student housing, Class A. It was a 4-year-old property. We closed it. It was a 6.5 cap rate. We assumed the loan on that. It was a 13.5 million dollar purchase price. We assumed the $5.6 million loan at 3.62% interest rate, and we raised about $9 million for that, about nine million. And before that, in July, we closed on a 70-unit Class A property in Wichita, Kansas, and that was a 1031 property, meaning in 2020 we bought a 64-unit property in San Antonio, held it for 15 months and sold it for $7.5 million. Took that, did a 1031 into a $9 million Class A asset in Wichita. So those were the two recent acquisitions, and I've done in 2021 and 2022. I was disposing of most of my assets. And a lot of people are asking me why were you selling? Well, there's a reason why it's called a seller's market, because that's when you sell. If you're an owner operator and you've held on to your deals for a year, 2, 3, 4, and you're in a seller's market, this is what you want to do. You want to sell, or else you're going to have to hold these assets for another term until the market comes back up and where you can sell it. So I disposed a lot of my assets. I had a 128 unit property that we held for about 24, 26 months. Bought it at $9.8 million, sold it for 16.5. Just sold another 76 unit property in Littleburn, Georgia. That's about 25 minutes northeast of Atlanta. I bought it in 2018 for $4 million, sold it for $7,075,000 right now. And that property, so it just goes to show you how volatile market conditions can be, and how you really have to have your thumb on the pulse of the market to understand timing. Now, we don't have crystal balls. We don't really know exactly the date that the ball is going to drop and things are going to change. But I'll give you an example. So I put this 76 unit property out. It's a cardinal property. A cardinal property means a prefab property, meaning that the structures were built off-site. They were brought and they were placed on a slab, and then they were put together. So that's a cardinal deal. Cardinal deals don't trade for very high per door just because of the construction of it. So I had 76 units. I had Cushman and Wakefield, the guys who sold me the property, they relisted it, and they listed it for $10.5 million. That would have been the highest trading cardinal deal ever done. in the history of Cardinal deals. And they took it to market. I had 5 buyers at $10.5 million, all chomping at the bit, wanting to buy it. Yeah, we see and there was a lot of upside. So the upside was in taking the rest of the units and bringing them to the market rents that we established on our rent roll. And we have already proven that upside. For example, when we took over the property, our 288 unit square foot studio units were renting at $550. When I sold the property, they were $975. That was the bump that we took it up, right? And not all studio units had gone to that market rent, right? The 1 bedrooms we increased as well, and the 2 bedrooms we increased as well. And we proved that you can rent those units, to at that market rate. So people were chomping at the bit, going, "Oh my God, we can take it to that market rates, but we can even make it higher by doing better renovations, adding more stuff, fixing up the property." So they were very happy to pay $10.5 million. And at that time, people were buying deals at a 3 cap. Anyway, make a long story longer. 5 buyers. Everybody's ready. I'm negotiating with them all. We picked a buyer. We started creating the contract with them, and interest rates went up. And if you've ever gone into somebody's garage and you've opened the lights and you see all the cockroaches just scatter and disappear, that's exactly what happened when the interest rates went up. It was like the cockroaches just disappeared. You hear crickets. Where did all the buyers go? Where did all the buyers go? They disappeared. They were scared. They couldn't get the debt anymore. It was just a crazy, crap show. Thank God, the value was still there and we were able to sell it for $7 million. But the market conditions, I don't like to say that we lost $3.5 million because we never really had it, but the value was there. The value is there, and the market changed so quickly. We didn't know exactly the day and time. So you really want to be on the pulse of whatever market you're in and understand the market changes, market fluctuations. And when it's a seller's market, sell. You don't want to get caught riding that wave down and having to ride that wave back up again. If you bought it correctly and you bought it conservatively, you can most definitely ride it out. But why? Why ride it out? There's a reason why we're at why it's called a seller's market. So you sell, you get out of that market, you go into another market that's emerging, you buy at that point, you ride that up to the market, to the top, you sell, and that's the cycle and the game that you want to keep doing and want to keep playing. So that was, just a couple of the projects that we did. What other questions or topics you guys want to talk about?
Hey, Nitzan, I have another follow-up question. Was it hard for you to find a 1031 exchange property? Tell us, I guess, maybe go into a little bit more detail about that, because that's certainly a topic that affects or could affect all of us, obviously. So did you have a property already lined up? Were you eyeing properties in terms of planning this stage and planning your exit? Maybe just go through that thought process a little bit too.
Yeah, sure, absolutely. So I've attempted to do 1031s with my single family homes during this whole market and blah 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 and whatnot, and that was very tough. And I lost the 1031 because I couldn't find I couldn't find another property that made sense, right? Just couldn't do it. With the multifamily, we got an unsolicited offer for our property in Texas. And at the time, I was looking at 3 other properties. One was a student housing that we just closed on. One is a property in Buckhead, Atlanta. And another property, which is the property that we closed on, was brought to me by a colleague of mine that I've helped him. I've sponsored many of his deals before and helped him with his assets and managed them for him and gone full cycle. So he was part of that Texas deal that we sold to do a 1031, and he brought that property. But if it was it was very difficult to get all of the investors on board with doing a 1031. We really had to show them what we were doing, what was going on, how they would profit from it, and it was a big educational piece. And I'm just going to say this: when you're doing a 1031, make sure you have all of your bases covered, because you're dealing, first of all, you're dealing with a bunch of investors. Then you're buying another property, so you're dealing with lenders, and lenders have their attorneys, and attorneys always want to cover their asses. Oh, sorry, didn't mean to say that out loud. Too, you want to cover their tushies, right? And we had this one attorney 2 days before closing tell us, I want all of the old investors to sign the new PPM, because we had a couple of new investors that came in as well, but they came under the old LLC. And this guy's like, I want all the old investors to sign a new PPM. And my SEC attorney is going, for what? That's absolutely ridiculous. There's no need for it. He goes, no, if not, we're not closing. It is 2 days before closing, 2 days before my birthday, my 52nd birthday. I'm in Key West, hanging out with the family and friends. They're all on boats. They're all doing their thing. I'm in this little hut with my head going down like this, going, how am I going to get in touch with all these Chilean investors and my South American investors? It's wintertime down there. They're off skiing in Hawaii, in Miami, in the Alps. I'm like, well, how am I going to find them? Thank God I had a great team around me. We did that. But it's you really want to be able to have that that property kind of lined up before you even go into a 1031, right? It's difficult. If you're planning on selling an asset, you want to start lining up different properties before, because that could be the one thing that that will make you that will either make or break your 1031, right? My $16.5 million property, it was a buyer who they were doing a 1031, and they needed a property. So they came to me and they offered $16 million. And I knew that they were a little stressed in time. And I said, you want to buy my property? Excuse me. I said, there's no reason for me to sell it. It's cash flowing. It's a beautiful asset. I got no issues, no vacancies, just smoking property. I got tons of upside left. They offered 16 million. I said, nah, they're not going to do it. They offered 16.2. I said, nah, I'm not going to do it. They offered 16.5. I said, write it up. So when you're in a 1031 and you're the buyer and you're stressed, that can happen as well, right? Because you don't want to lose that 1031. You want to make sure that your investors get in. So line up the properties beforehand. Start talking while you're in your due diligence phase, while your buyer is doing due diligence on your asset that they're going to buy. Start turning every stone, start looking at every deal, talk to everybody you know, and say, hey, we need to find a good deal, and start underwriting like a mad person, because you don't want to get stuck going, oh, we couldn't find, right? What else?
Hey, Nitzan, I have a quick question for you. First of all, thank you for being on. Happy New Year, everybody. I'm sorry I'm not, but I'm driving around. One thing that you said that was very interesting to me. So you say you have international investors. Is that a very complicated process to get done? Since I have some relationships overseas, and this has come up about investing in the U.S., but I've never really looked into it. Thank you.
Yeah, it's not as complicated as people think, right? Is basically what you want to do is you want, I tell everybody, I tell all my investors, create a limited liability company here, bring the money over, invest with your LLC, and do it. Now, what we've been fortunate enough is my international investors all come from Chile. They come from South America. What's nice is my CPA, who's in Miami, is also from Chile. So what's nice is that I bring my Chilean investors, I turn them on to the CPA, And now he talks to them and he makes them feel very comfortable because he speaks their language. He understands their mindset, and he creates their LLCs. He creates their documents because some people, it's better if they create an S corp. Some people, it's better if they do this or if they do that. Right? I'm not a CPA. I only play one on television, and so it really helped them to invest with us, knowing that they had somebody on their team that speaks their language, that understands their needs, that brings them over. Now, mind you, this is a perfect example of building relationships, okay, where the property comes second. So we all know that Miami is the gateway for Latins into the US, right? Miami, South Florida, that's part of South America, according to them, right? So we started, my friend, who I've known since I'm 14 years old, lived in Chile, and I helped him organize and bring all these investors over. The first deal that we did was in Sumter, South Carolina. Anybody heard of Sumter, South Carolina? I've never heard of Sumter, South Carolina. Okay, so here we are. We're bringing these Chileans, these Latins, a property in Sumter, South Carolina, and the first thing they said is, "¿Cómo? Sumter? ¿Qué es Sumter? ¿Dónde está Sumter?" Now we had to educate them on what I had to get educated on Sumter, South Carolina, because I didn't know what the hell what was going on over there. But my point is that it doesn't matter that it was a secondary or tertiary market. It doesn't matter that they never heard of it. We had their trust. They were investing in us, and they invested in us and in our knowledge and in our track record and our history. And that's why they were able to invest in Sumter first, rather than a Miami or a New York or an LA or a Chicago property, right? So obviously the property has to make sense. The property has to be conservatively underwritten, has to have good upside and all of that stuff. But people will invest because of you. And so to go back to your question about international investors, it's fairly easy, right? People want to invest in the US. Okay, you just gotta find a good in my opinion, find a good CPA that deals with European investors, Latin investors, wherever they're coming from, Asian investors. Find someone on your team that can help them transition and bring their capital over and work with them. And it'll be that much easier for you. Does that help? Did I answer your question?
Absolutely, Nitzan. That is so cool, man. I love it. Thank you so much.
Yeah, absolutely. Absolutely. Awesome. What else? Who's got some more questions? Great questions. I'm going to plug in from my laptop now. So I'm going to.
Don't be shy here. I know it's the new year and we haven't met in a couple of weeks, but please ask any question. No question is a bad one.
Yeah, absolutely. Feel free to ask.
Okay, so Nitzan, so I will do a follow-up then if nobody has anything right now. How about with the Patriot Act? Is it a big problem, or do you just let your CPA/lawyers handle the, like to verify their funds aren't coming from either a terrorist organization or blah, blah, blah? That was my biggest hang up before when I was thinking about doing this. Was go ahead.
Yeah. So you gotta do your, hold on. I'm just going to transfer.
Oh, you're on mute.
Okay, there we go. Awesome. So the Patriot Act and all that, you gotta cover your ass. Why? CYA. So definitely check the OLFAC list, check the AML list, right? Make sure your CPA runs, if you're doing the accredited only, the 506C, make sure that they do the background on them and they check their financials. you definitely want to be compliant with that, right? You don't want the SEC knocking on your door going, hey, who's this? Who's that, right? So you definitely want to wanna there's so many ways to get in trouble in this business, especially because we're dealing with the SEC, okay? That you want to be squeaky clean. You don't want to give anybody reason to come and to look, right? So always be transparent, always communicate with your investors, the good, the bad, and the ugly, right? Because if you're sending out distributions to your investors and something happens and they don't hear from you, it's okay. You sent them out their money, they know it's going well. But what really is bad is when you aren't distributing funds, the properties is hurting and you're not communicating to your investors. That's when they get pissy. That's when they get antsy. Then they're like, how come there's no communication here? Right? You always want to keep them happy. You always want to. Now, when I say happy, I don't necessarily mean happy by doing a great job. Things happen. We had a shooting in our property the other day. Somebody came on the property with somebody else, and the guy was that stupid that he shot his friend that he came on the property with and killed him. Now, thank God, it wasn't the tenant that died, right? So we were, you call up, you send out an email. Hey, we had some good news, some bad news. The good news is that nobody in our residence got hurt. The bad news is there was a shooting on site. It wasn't somebody from the property. It was somebody from off the property. They came onto the property. So you just inform everybody. And when they're informed, they're okay because remember, these people are investors. If you're dealing with accredited investors, they understand. They understand that doo-doo happens. And when doo-doo happens, you got to pivot, you got to shift, and you got to handle it, right? But if you don't talk to them and doo-doo happens, and then they find out later, and then go, hey, what else? What else didn't you tell us, right? What are you keeping behind? What are you not sharing? So do that. Check your investors. It's good practice for you to do it. Don't rely on anybody else. I mean, ask your CPA and your attorneys to help you with that, but do it yourself because it's good practice. It's good practice for you. If anybody asks you, if anybody comes up, you can pull up the site and go, yeah, look, I checked over there. I checked A to Z. I checked their names. I pulled it out. They weren't there. So it's always good practice.
Awesome. Thank you very much, Nitzan. Again, a great answer. Thank you.
Yeah, absolutely, man. My pleasure. A lot of there's a great saying. How does it go? I don't want to mess it up. Wisdom comes from knowledge. Knowledge comes from experience, and experience comes from bad decisions. Right? You make enough bad decisions, you're going to become very wise in your old age.
Yeah, unfortunately, I've made a lot of bad decisions, so I have a lot of experience.
There you
So,
go.
yeah,
That's right.
exactly.
The key is to make that mistake only once and to learn from it and to adjust and to never make it again. I'm listening to a book right now on Audible. I'll tell you guys the name of it. Hold on a second. It's great. It's about about Blackstone, the guy who started and created Blackstone. It's called What It Takes by Steven Schwarzman. And he was talking about how at one point, Blackstone had lost, pick a number, $3 billion. And one of his investors called him into their office and he got reamed like he'd never been reamed before. And he goes into his history, how his parents never yelled at them at home and he'd never been yelled at. And here he is and he's being yelled at and he's freaking out. And he doesn't know how to behave. Anyway, long story short is that he leaves the guy's office and he says to himself, he goes, that mistake we will never make again, right? Because if you don't learn from your mistakes, you're going to keep doing them over and over and over again. You're never going to get anywhere. You're never going to advance. People will see that you're making the same mistakes. They won't invest with you. It's just a domino effect. And another thing that I liked about what he said in his book is one of their core values, their number one core value in Blackstone. Can anybody guess what it is? It's 3 words. Come on, somebody. Shoot out an idea. 3 words. Their first core value. Don't lose money. That's what Blackstone is built on. Don't lose money, right? So I highly recommend listening or reading this book. It talks about investing. It talks about real estate. It talks about building a culture, about building a community, about how to invest. You know, Blackstone, BlackRock, they're all owned by the same people, right? And it's just amazing how he built it and where it went. And it's funny. So I used to work for Lehman Brothers back in the 90s. Yeah, absolutely. And he started out in Lehman as well, and Bear Stearns and all these companies that don't exist anymore. And he's talking, and he's mentioning these names of these like big people. And I'm going, I know these people. I remember watching these guys, you know, walk around the office, and these guys were making hundreds of millions of dollars at the time, and that was a huge ton of money. I mean, it's huge now, but you know, now people talking billions. Back then, people were talking millions, and it's just funny to hear all these people that were in that office and they were doing deals and what they were working on. So it's an interesting book. What else? What else we want to talk about? Who's got questions? Who's got deals? Who's got money?
I got a question. I got another question. If no one's gonna take the floor here.
Yeah, man.
Hey, do you have the same team, Nitzan, for all of your deals, or are your deals specific to the region that you're buying in terms of you establishing a team?
That's awesome. It's a great question. And I see a lot of what goes on in the multifamily world is people will raise money and then they'll join this team and they'll join that team and they'll join, right, and they're all over the place. I'm not going to judge if that's a good thing or a bad thing, right? I'm just going to answer your question. I started out with when I started out in multifamily, I started out myself and my business partner, and we created Cornerstone Investment Partners, and it was just the 2 of us. And we would go around and we would partner up with other sponsors, right? And do deals and help them raise capital, help them sponsor and help them manage and do all that. I now have gone and created another company called MTN Investment Group. M stands for Mosery, Taylor, Nova. So I'm the M, Charles Taylor, and Nova with the 3 principals. So we have 6 people in MTN, right? We have the company, right? Now this company goes out and partners with people, okay? So what we do is we have debt, property management, asset management, acquisitions. We have all that in-house, meaning that if we go out and we find a deal ourselves, we can take it down by ourselves. Okay. Now it doesn't mean that, Eric, if you got a $25 million deal, right? You just wrote an LOI on it and it got accepted and it's a smoking deal and you need help, right? We will come in, we will help you as well. So we will partner with you on that deal, right? So I'm not the lone ranger. It's just, you know, pounding my chest. It's me. My success has been predicated and is because of the people that I've worked with in the past, right? I've done multiple projects with the same people because they would go out and they would find the deals and then they'd come back and say, hey, Neats, we got another one. Okay, cool. Let's work on that one. Hey, Neats, we got another one. Let's work on that one, right? So it's okay to go out and partner with different people. The problem is, or the challenge, I should say, the challenge is that, how can I put this in a way? There are no more kids in the area, right? No more kids listening? Okay. It's like going out, you have the opportunity to go out and to have one-night stands constantly, right? One-night stands. You never really get to know that person, right? One-night stands could be awesome. Wow, that was great. Or one-night stand, dude, we didn't connect. We didn't know what was going on. I didn't know what they wanted. They didn't know what I wanted. It was a terrible night, right? So it's a roll of a dice when you're doing one night stands. So when you're partnering up with constantly with different people on different deals, that's like a one night stand, meaning you're doing one deal and that's it. You don't really get to build that depth with that team. Whether now, look at me, I'm with the same woman for the last 20 years. Okay. She knows how to rile my buttons. She knows how to calm me down. She knows how to turn me on, turn me off, switch me around, blah, 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 every which way. And I her. That's because we know each other. We've gotten time together. We know how to work well together. Are there arguments? Is there friction? Absolutely. But there's that depth that keeps us together and we're able to go faster, higher, bigger, faster because we have that depth together. Does that make sense? Yeah.
Yeah.
Right.
I mean, you definitely answered. I mean, you definitely answered the question, which, is very true in some senses. You want to establish your point is you want to establish a quality relationship with the team and hopefully to do deals both in the present and in the future.
Right. Right. And think about it like this. I'm going to go back to the one night stands and the whole thing, right? Imagine every night you're bringing somebody different home to your parents, right? Or not to your parents, but you're bringing them home, or you're bringing them to your friends. You're introducing them to your friends. Every night there's someone, hey, look at this one. Hey, look. Now your friends are looking at you going, this guy's very shallow, right? He's not looking for anything deep, right? They're very shallow. This is who they are, right? That's how your investors look at you whenever you bounce around from person to person, from team to team to team to team. They're going, dude, where's your stability? Where's your depth? You're doing every time we turn around, you're bringing us a deal with somebody else involved, right? Now, again, I'm not saying that that's a bad thing or a good thing. It is what it is, and some people like doing that. Some people don't. I found for me, the best thing to do is to build those relationships and to build that team. Because when I'm going and I want to talk, and my goal now is to reach out to Blackstone eventually, or more BlackRock. And by the way, BlackRock is owned by Blackstone. And Blackstone was created because Schwarzman is black and his partner's name meant stone in another language. So they were Blackstone. That's how they came up with that name. But anyway, if you want to eventually go out and talk to those family offices, equity groups, private equity groups, funds of funds, and you want them to stroke you $5, $10, $15 million, they want to see stability. They want to see a depth. They want to see a company. They want to see, you are stuck. You are solid. You are not going anywhere. By jumping from person to person, from team to team, there's no, that you're all over the place. Okay. And it's the same thing when I got started out. My mentor told me, he goes, just shotgun it. Find emerging markets. Find 2 or 3 or 4 emerging markets. They dial deep into those markets and go. So, we did a deal in Texas. We did a deal over here. We did a deal over there. And when I was going to talk to these big equity groups to raise more capital, right? To raise more capital, they would come and they look and they go, yeah, you know what? We'd like to work with you, but you're all over the place. You're all over the map. We would prefer if you were localized and know a market well and dug deep into it, right? Same thing with your partnerships, man. Dig deep into them. Get good, get solid so that you can churn and burn the deals, right? It's churn and burn. Right? I hope I answered your question.
Yeah, you did. Thank you. I appreciate it. It's great insight because again, it offers a good and different perspective than maybe what some of us were thinking on the call. So appreciate that.
Yeah, absolutely. Look, I'll give you an example, like my Chilean guys, right? So my Chilean investors, my connection to them is my friend who I've known for 14 years, and he knows these people that he built his company with for years and years and years. I started bringing them deals because deals were brought to me and I would underwrite. Oh, hey, look at this one. Oh, hey, look at that one. And their first question is, how come that person wasn't in that deal? How come that person wasn't in that deal? I said, oh, well, that guy brought me that, and that person brought me this. And, in the beginning, doing their first deal, they didn't understand that. So they were very hesitant. Well, we liked the way that guy underwrote. We didn't like the way that one underwrote. We didn't like what they said. We liked that. And so it was all over the place for them. So I realized very quickly I got to focus and keep the information flowing in a certain way from a certain group in a certain path so that it's always the same, right? Why is McDonald's successful? Because wherever you go, it's the same thing, right? So that's kind of the same mentality that I create. And if I may suggest, thank you. If I may suggest another book that's going to completely transform your investing business. See, I have a coaching program as well, but my program is a little bit different. There's a book called Clockwork by Mike Michalowicz. I'm going to see if I can type his name here. Mike Michalowicz, I believe. Yes, there it is. Thank you, Eric. Yep. So the book talks about, there it is. This is an awesome book. Now, mind you, I'm not a college graduate. I didn't go to college to learn business and to do anything like that. So a lot of the things that I've learned on my journey, I've learned because of my mentality. My mentality is I'm freaking lazy. I'm one of the most laziest people you'll ever meet. My wife is like, can you pass me that? And it's 6 inches away. I'm like, really? You want me to move? I'm like, can't you just come and he said that's my mentality. So I do everything. I created my company, I created my business, I created my lifestyle so that I wouldn't have to work so hard. Right? I see people working construction and they're knocking shit and they're working and they're building and they're sweating. I'm like, dude, that's a lot of work, man. Right? So out of necessity, I had to create things so that I would get other people to do the work. A, because I'm lazy, and B, because I'm not the sharpest tool in the toolbox, right? I always knew that I needed to surround myself with people that were a lot smarter than me. And I remember the first time I was at one of these multifamily conferences, 15 years ago, whatnot, 10, 12 years ago. And they broke out this Excel sheet and they go, okay, you're going to have to underwrite, you're going to have to analyze. And I looked around and I go, what's an Excel sheet? What is Excel? And people look at me, you have no idea what Excel is? I go, no, I didn't. I was a stockbroker. And the last thing I did after I was a stockbroker was I left the country. I became a hippie, traveled the world for God knows how many years. I have no idea what technology, what they came up with and blah, blah, blah. I used to work for a CPA when I was 22 years old, when I just came back from the Army. They had a huge paper spreadsheet with numbers written, and I had a calculator. I had to add every single number on the column and on the row, and that was Excel sheets. So I started way back. So this book actually confirmed a lot of what I was doing in my business out of necessity, not out of knowledge or this is what we're doing, but this, how can I build a business? What can I do where I could step back and not work and have it run for me, right? A lot of the things that we do as real estate investors, and I know Valerie, I know you have kids. I don't know if anybody else on the Zoom today has any kids, but we buy real estate with, and we say to ourselves, you know what? When I pass, I'm going to leave my real estate empire to my children. And what's the first thing these children do when their parents pass away? The hell are we going to do with that property? Let's sell it, right? They get rid of it because they have no idea what to do with it. Because the children are doctors, they're IT people, architects, they don't know what to do with the property. So instead of leaving your kids real estate, leave them a company that buys real estate, that trades in real estate, that acquires real estate. Leave that to them. so that they don't have to worry about dealing with the real estate, but you've got the company, right? And that's kind of what Blackstone did, right? Now, this guy, Steven Schwarzman, when he passes, he's not leaving real estate to his children. He's leaving Blackstone to his kids. And that's billions and billions and billions of dollars of income every single year, whether his kids work in that company or not. So this book, Clockwork, teaches you how to set up your company so that you can now step away from it and go do whatever it is you want with your life, right? You don't have to worry about underwriting, analyzing, building relationships, acquisitions, disposition. You have to worry about that because you built a company. You've put people in place in specific places, and now you have a team that's doing this for you. So read that book, because that book talks about the 4 Ds. And again, I've done this, and when I read this, I'm going, oh wow, this is what I'm doing. So it's doing, delegating, deciding, and designing. These are the 4 stages of our company. So when we're starting out, we're doing everything, right? We're doing everything. We're designing, we're delegating shit to ourselves, we're deciding for ourselves, we're doing everything, right? We're talking to brokers, we're underwriting, we're analyzing, we're building relationships, we're going to networking events, we're creating our spreadsheets, we're creating our social media posts, we're doing our meetup, all of that stuff, right? That's fine. Start. Do everything. But as quickly as you can, start finding people to delegate shit to. I'm a master delegator. Okay? I can delegate everything and anything that can be delegated. I will delegate. Delegate. Okay? Now, after you've delegated, after you've hired someone, so how does it work, right? You're by yourself and you finally like, oh, you know what? I'm going to hire a virtual assistant, or I'm going to hire an assistant, and you start working with them and you're delegating, but you're always looking at them, you're micromanaging them, blah, blah, blah. And at one point, like, you know what? I'm going to fire them because they're not doing it well enough. So now you're back to doing everything again. So there's a right way and a wrong way to delegate. And after you delegate, you delegate work to other people. Then after you've delegated work, they do the work, they give it to you. It's good, it's bad, do it over, great, continue. After that stage, then you let that person also make the decision. Here, I delegated to you, you do the work, you decide if what you did was good or bad, and let's continue, right? Now, obviously, if they made a decision, we don't yell at them, we don't criticize, we say, okay, I applaud you for the effort and for the fact that you made a decision. Now, why was it the wrong decision? What happened there? How can we change that, right? So now you're going from delegating. Now you've delegated everything. Now these people that you've delegated all the work to, they are now going to start making decisions. So you went from doing to delegating to letting the people delegate, make their own decisions, to now you can go and now design. That's where we want to be. We want to be on the designing stage, right? That's working on your business, right? Not in your business. When you can get to a point where you're designing, where you're going, okay, what type of assets do we want to go after? What's the marketing? What's the game plan, right? How do we create? How do we build who we are, right? That's what Steven Schwarzman was for Blackstone. He was doing everything in the beginning, but then it started to build and build and build. And now he's the guy that's designing. He's out there talking to his investors. He's making sure that the investments are going well. Things are rocking and rolling. He's talking to presidents. He's going to China. That's his deal. He wasn't the one writing the contracts. He wasn't the one analyzing the deals, checking the income and expenses, none of that, right? So read that book, and that book is going to help you build your company so that you can go and now stand back, take a step back, and relax and enjoy. Hope that helps.
No, that's fantastic. I want to throw in there that people that may not know, like I know Traction and Gino Wickman get thrown around a lot there. This book actually is forwarded by Gino Wickman, and he kind of refers to it as before Traction. Like I read the Traction book. And it was great. It was really good, but I can see it's for bigger companies. And this kind of was before that, and actually talking about before you can even get to that, you have to do just what he said, like the elements of delegating and the different levels. And so, yeah, it's a really good book.
Absolutely. He has another book. It's called Profit First. How many of us have started our own businesses, even now this, and we were always like, oh, you know what? It's my company. I'm not going to take a salary. I'm just going to put it back in, put all the money back into the company and blah, 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 blah. So the book Profit First says, hold on a second. The first person that has to get paid is moi. I got to pay myself first. If you put into practice paying yourself first in your business, then your business will have the practice of paying you first. And we go, well, wait a minute. If all I have is $100,000 coming into my business and I pay myself $20,000, $30,000, how am I going to pay my bills? In the book, he talks about how you will be able to adjust to be able to pay your bills, but you got to pay yourself first, right? In the airplanes, what do they say? Mask goes down. Who do you help first? Help yourself first, because if I'm passed out, I don't know what's going on. I can't help anybody around me. If I'm sucking wind and I can't pay my home bills and I'm being foreclosed on, I can't focus on my company. I can't focus on my business. I can't focus on building my empire. So profit first. Pay yourself first.
All right, perfect.